Hello, ladies and gentlemen, welcome back to Day Trade. Today, we are going to talk about how to make consistent profits in trading. Are you struggling to stay profitable in trading? Do your gains vanish as quickly as they come? Today, I'll show you how to build consistency in your trading and make steady profits. As you can see on the screen, today we are going to talk on these four topics. The first one would be the number one mistake traders make, and the second would be the winning mindset shift, and then the best strategies for consistency, and then we'll talk a little bit risk management rules to protect your capital. So let's begin with the mistakes traders make. As most of you know, the traders who are in trading for almost 5 to 6 months, you may have heard mostly chasing profits is not a good idea. If you have a solid system or a setup, you can say that, right? So if you have a solid system and you are not following it, you are chasing profits. That is the most common mistake traders make. And most of traders in the beginning phase are not really aware about this, but the trading emotionally, right? The emotional phase a trader goes when he puts on a trade, when he opens, then as the market goes in his favor, he is greedy, and when the market goes against his favor, he is a little bit fearful. So this makes a trader take action in a bad way. When you are fearful, you do not want to take the pain of getting hit with a SL, right? So most of the traders in the beginning phase, what they do, they try to move their SL little bit lower instead of taking the loss and quitting the trade. So when the opposite happens, when the market goes in their favor, what they are doing, they are taking the profit immediately when they see few money in the account. So this is greed acting. So this is something they are not aware initially in the trading phase, but over the time they will get a hold of their emotion, right? And what is the solution of these kind of mistakes, right? The solution is to stick to a structured trading plan and journal every day, like I do in my trading uh, Telegram channel. So I will post the link in my description about the trading channel on Telegram I have. So let's talk about the second topic which we have is shift your mindset for consistency. How do you become consistent in your trading? So first of all, when you are you have a structured trading plan, then what you have to do is to stick to that plan, right? So when you are shifting your mindset for consistency, I want you to think like a casino, right? Focus on probabilities. This trading is all about probability game. It's not an individual trade which is going to make you rich or a successful trader. You have to show up on the screen every day and make a trade. You don't know in advance that your trade, once you put a trade, it is going to be in your favor. Either it will hit your TP or SL. What you have is a trading plan, and that gives you an edge in the market. it can be 80 to 20 ratio, or it can be 90 to 10 ratio, it can be 50-50. But when you come to the screen every day and you execute your trading plan consistently, and you will see that your mindset is shift. You have to be consistent with this, for a month or two. Okay. And then you will find that your mindset towards the trading, it totally shifted, and you now see in probabilities, right? And then the risk management part is also a bit of important part in shifting your mindset. you know when when you take a percentage of risk, right, which doesn't bother you that much, right? So let's say if I am taking 1% per trade risk, and I'm sticking to that percentage, that will not bother me because I have 100 trades to make. Out of those 100 trades, if I am on those all of those 100 trades, I am uh, I lost all the 100 trades, then I'll be out of the market, or I have blown my account. But if I have an edge and a structured trading plan, I do have a probability of winning in the market, let's say for about 70 to 30 ratio. 70% of the time I'm winning in the market. So out of those 100 trades, if I am risking 1%, then I do not have a mental tolerance which puts me in a position where I am fearful. Okay. So this is also a major component in shifting your mindset for consistency. And then we'll come to the topic strategies for consistent profit. So my strategies are a little bit different. Your strategy can be a little bit different. Every trader on the planet have different strategies. But let's go with my strategies because I can only teach you what I know. So what I do, first of all, I follow a trend. What I'll do is I'll mark off at the start of the week or a month. I will go on to the higher time frames, and I will mark off where market can go. This is just an observation, and you know you can see that I on the Monday, let's say this is the week, uh, when I come to the chart, I will see that market is inside. I will not take any trades. I will see that where the markets is heading. Market is in a downtrend. So I will mostly look for a short trades. Okay. So first of all, I will define my trend, and then I will look for position sizing. So uh, then second, I mostly trade breakout. Okay, once the market shift its course, breakout structure happens, then I will mark off my ranges, and then I'll as you can see in my Telegram channel, I just use Fibonacci tool to measure the distance where market can go. So this is all based on my observation over the period of last 4 to 5 years of trading. uh, I have found out that it only works on gold at the time. So I will observe, and I'll put my Fibonacci tools, and then I'll open a trade if the market comes into my zone. Okay. And then most of the time, backtesting and practice my strategies before going live. So what I'll do, mm, 1 hour before the market opening time, I'll come to the market and open the chart and look for let's go on to the 1 minute time frame. Let's give you an example what I'll do. Let's say market is opening uh, market is opening here, right? Let's go here. This is London market on 6th of March, and market has just opened here, okay, 1:30 p.m. according to my time zone. And for the first hour I will observe the market and backtest it for and look what market is giving me today's market. If it can show you in the first hour that market will be bullish or bearish, so based on that I will do my research, and when the market opens after the equity session opens, then most 90% of my trades are after the equity session. Okay, I'll see the setup and look for the candlesticks. The final step was the candlestick. Okay, so this pin hammer and this short. So I was on this trade, as I have posted on the Telegram channel as well, that I wanted the market to come back in this zone, but it didn't. So instead I had to open my trade over here. It resulted in break even because it came back. First it came down to my target, then came back down and hit my break even. So this is what I do when I backtest and practice to be consistent, uh, uh, to be consistent in the markets and consistently profitable in the market. So this concludes the strategies for consistent profits, I guess. And what was the third point? Let me just look at once. So risk management rules. So the risk management rules is it can be different for most of the people, but I am simply, once I open the trade, as you can see, once the market goes into 1:1 risk reward ratio as it has done here, you can see I have shorted here, market goes to 1:1 ratio from my position, and I am break even. So this is most of all my risk management part. Once I have opened the buy position over here in this trade, and once the market goes over here, around here, I am break even, right? Once the market goes over here, I am break even, and then market goes into my direction. If it comes back down around my break even point, then I can be break even. But in this case it didn't, and it goes back to my target. So in the risk management part, this is most of the things I do. uh, so this what does it does is it definitely protects my capital in a way. I can always have another opportunity, but if this goes wrong, I will lose the trade. Okay, so I have lost the trades, few trades in this week. This one, let's say. So I opened a trade. uh, I opened the trade over here, and it goes back, and it doesn't go 1:1, and it before that it came back down and hit my stop loss. So this is an example of where it doesn't go 1:1 and come back to my SL, right? So this is all pretty much about my risk management. And few more things I would like to talk about: the trading psychology for consistent profits. This is the very vast topic, but let's talk about a little bit. So emotional control, it is very crucial. Avoid FOMO, and FOMO appears when you have not back tested your strategy a lot. You have to keep that in mind, that every day you have a new opportunity to trade. Market is not going anywhere. So if you have missed any trade on a particular day, just let it go. You don't have to enter in a bad position, bad place. Okay. So you have to make a daily trading plan. Stick to your system, keep journal like I do. I'm posting this in my Telegram channel, and few of you or a few of my fellow traders are in the channel. I hope they are learning few things from my posted trades, right? So I guess you know consistently, mostly this consistency comes from discipline, and overall the discipline, I also put the back testing a lot. The more you back test, the more systems you will find, and once in a while you'll check your system and it will hit to your target, and that can be your setup, right? So that's all for this video. I think I have covered all the points, and I hope you have got some value out of this video. uh, Bye bye, take care.